Why an emergency rate cut would be a disaster. Let's talk about this at a couple of different levels. We will also talk about some shakeup at bigger pockets as well as homes, new homes finally getting smaller. Alrighty, folks, let's talk about this carry trade. We talked about it a little bit yesterday. Essentially, where you borrow money from a low rate environment like Japan and you invest that money into a higher interest rate environment like the United States. This is called the carry trade at a simple level. And obviously what has been going on is Japan has been raising rates, which diminishes the delta or spread on the carry trade. And what we saw yesterday, what we saw the day before unwinding in Japan, was some of that carry trade being unwound. Did you know that maybe it's a little counterproductive or kind of questionable that if the U.S. did a 75 basis point cut like Jeremy Siegel is begging for, that the carry trade will actually get unwound faster? How can that be? Well, you take the carry trade and you change both levels, right? Japan is raising, the U.S. lowers, the spread gets smaller. In fact, an emergency rate cut would be horrible for the carry trade, and it would force its unwinding faster. Next, let's talk about what emergency rate cuts signal. If the Fed were to come out, say today, tomorrow, with an emergency rate cut, what do you think it means? What do you think it means? Well, it means something in the financial system is clearly breaking. They are concerned. Emergency rate cuts are certainly happen, but they are not normal. They would much rather prefer to wait for their regularly scheduled meetings. So again, an emergency rate cut would be all kinds of a disaster, both for the carry trade, both for a signal to the economic condition or the banking system, perhaps, of the U.S., and it would undoubtedly unleash a lot of pain. Rate cuts are not, specifically emergency rate cuts, are not some panacea to keep the global stock market, crypto market, real estate market booming. In fact, emergency rate cuts typically signal a disaster has occurred or is about to occur. So be careful what you wish for, Mr. Jeremy Siegel and others. An emergency rate cut is not a cure. It's often a signal that something bad is happening. Let's talk about the average new home. One of the things you've heard me talk about probably for the last year or so is my hope, my desire, my wish that new home size would shrink. In fact, I believe that it's the size of the new home shrinking that could be the unlock for affordability. It will take time. It will likely take years. But smaller homes is one answer to entry-level housing. Did you know? I got some stats. Did you know that in 1940, so we're going back a ways, 1940, the average home was 750 to 800 square feet. That was the average home built in 1940. Fast forward to 1973, the average home was 1,525 square feet. The new home size peaked, the McMansion era peaked in 2015, with the new home size being 2,467 square feet, almost 2,500. Well, today, thankfully, we are down 9% and hopefully going lower. The new home size today is 2,233 square feet. It is frankly my hope that folks like KB Homes, like Pulte Homes, like Lennar, like all of these folks, they start offering entry-level housing sub 1,000 square feet. Let's go get a 995 square foot, 3-bedroom, 1.5 bath, 1-car garage, maybe, whatever. If we start building smaller and smaller homes, the price points would drop. And yes, we would start having more entry-level housing. I consider that a good thing. I consider that a good thing. Let's talk about some Fed presidents. Some Fed presidents were making noise yesterday, obviously with the large drop. Fed President Goolsbee had this to say: if the economy deteriorates, the Fed can fix it. Yeah, thanks, buddy. Thanks, Mr. Goolsbee. Maybe you don't wait for the economy to deteriorate, but the Fed will fix it. This one was really good. Nothing in the Fed mandate about making sure the stock market is comfortable. I got to tell you, I really like that one. It's like, hey, what's my job? Nope, I don't care about the stock market. That's a middle finger to the Wall Street folks. That was pretty fun. And then the last one from Goolsbee is the Fed can wait for more data. Not to be outdone, we had something from Mary Daly, Fed President, San Francisco, I believe. The U.S. job market is slowing down. Okay, cool. We can't let it slow down too much. We should begin cutting in the coming quarters. Fed is not telegraphing a September cut, folks. Maybe I'll get my wish that they won't cut in September, that they will wait till November. Again, Mary Daly said we should begin cutting in the coming quarters. I thought that was a pretty interesting thing. Folks, I don't know if you saw this, but David Green from Bigger Pockets fame is out. Yes, it looks like Bigger Pockets is making some changes. I wanted to read to you, I guess, a line from David Green's Instagram and ask you some questions. Like a lot of you, I started my real estate journey on Bigger Pockets way back when Josh Dorkin was doing podcasts from his basement. Yes, that long ago. This is what David Green said, and I don't watch Bigger Pockets a lot today, but I thought it was a slight dig. But you tell me. This is right from David Green. He's talking about his podcast that he's going to roll out. The show will focus on what's going on behind the curtains of real estate, with a focus on education and the reality of the business rather than the fluff and inspirational stories that aren't realistic. I haven't been on Bigger Pockets in a long time. Are they doing lots of fluff and crazy stories that aren't realistic? I do think it's really interesting. I reached out to Bigger Pockets a couple of times, trying to get back on their show, and I think Bigger Pockets has a like a list of people they don't want to talk to. Like, hey, we don't talk to him. I think One Rental at a Time is not allowed on Bigger Pockets. I don't know why. Maybe it's because I have heartburn with Brandon Turner, and I've been very public about that. I don't know. I'm not sure why Bigger Pockets won't invite One Rental at a Time on. It's a realistic journey. It'd be nice to go back and kind of talk about, 2006, 7, 8 era. Go back, talk about what happened. It's I think it's do the work, all the things that we talk about, buy box, all of that. I don't know. I just feel like Bigger Pockets is anti One Rental at a Time. Or you know what? Maybe it's not One Rental at a Time. Maybe it's just they don't like Mike Zuber. That's probably it. They don't like me. Bigger Pockets doesn't like me. Oh, well. That's okay. I just thought it was interesting. Let's talk about some earnings. Palantir came out, beat top line, beat bottom line, and raised guidance. We also got Uber this morning, beat top line, beat bottom line. They actually had 2.77 billion trips. I don't know why, but that shocked me. I had no idea. I mean, that's a lot of trips. 2.77 billion trips in the quarter. I haven't done the math, but that's a lot of trips. Anyways, I thought that was interesting. Caterpillar beat bottom line, which means earnings, but they missed top line. That's the most important one. You can't fake revenue. but you can manage earnings. I was an accountant. I know exactly how that works. Then we had Yum Brands fast food. KFC and Pizza Hut saw same-store sales fall, while Taco Bell had same-store sales rise. Let's talk about lower rates and home prices. So, folks, if you don't know, mortgage rates are down roughly 1%. So I thought we should do some math together and why I am concerned if rates go too low, it will unlock marginal demand and we will go right back to an unhealthy housing market. It is my hope that we stay right where we are now, 6.3, 6.4, 6.5, certainly through the rest of the year. I do not want to see mortgage rates in the fives. I think fives would be a disaster. But here's some math for you. Here is some math for you. Did you know simply a mortgage rate going from 7.5% to 6.5%, that you can, quote unquote, borrow 10% more and have the same payment? This is the concern that I have, is if rates go low enough, if they go from 6.5 to 5.5, what does that do? Does that unlock demand? Does that demand start to dwarf the growing supply? That is certainly my concern. So we got a lot of stuff going on. You know what, folks? If you are on Bigger Pockets, do me a favor. Make some posts or whatever they're called, asking to interview one rental at a time. Let's see if they can't get us there. Or let's find out if they really don't like me and they say, hey, we can't interview that guy because he's not nice to Brandon Turner or something. At the end of the day, folks, I want to remind you that if you are part of school, you have a special treat in about 18 minutes. We're going to talk to Anna Kelly. Again, folks, we go live inside school. Anna Kelly today. You can ask her questions directly. You could put it in comments, which I will read. I think it is an important time to talk to someone like Anna because of what is going on in the world. And you can ask her what's going on, private money, whatever you would like. So if you ever wanted to see Anna Kelly live, it is your opportunity to interact and ask questions. And then, of course, folks, we got one congratulations to send out. Let's send a note or some love to Travis. Travis, you just closed on your latest deal. I want to congratulate you for doing the work. We will be sending out your card here shortly. Again, folks, remember, I love giving you recognition when you close a deal. If it's your first, you get a golden ticket. If it's your next, you get a black card. Just wanted to keep recognizing the folks that are doing the work, writing the offers, and closing on great deals. Congratulations, Travis. Folks, take care of yourself. Have a wonderful day. Hopefully, I will see you in a few minutes when we talk to Anna Kelly. Bye.